So we're going to do something a little different than we've been doing for the other talks, and we're going to have a discussion back and forth with Paul. And as we alluded to yesterday, Paul has successfully built and exited 5 consecutive companies, and we're going to go through a little bit of information on each one. Everybody can hear me okay? All right. I actually want to start, Paul, we were just talking at lunch, this is a company that's not listed in the presentation, but Vanessa Ventures was actually one of the first deals you got into, and you learned a lot about how the business works, and it probably shaped you quite a bit in terms of what not to do.
Vanessa Ventures was a TC listed company, and I was her chief geologist. And it was run by a placer miner from the Yukon and an accountant. And they had delusions of grandeur. And I was supposed to kind of put it into some sort of market context for them. So we kicked around, and I helped them actually make some deals like for very large gold deposits, and also helped them develop a small diamond mine in Guyana. And part of the process of being in Vanessa, I was there for 2.5 years, is that I helped them ink the deal for Cresitas. It's a 2 million ounce gold deposit in Costa Rica, and also you probably heard this company, Las Cristinas, which is an 11 million ounce deposit in Venezuela. And so we had that, and then I'm a science kind of geeky guy, and I used to run a research institute, and I brought ground-penetrating radar to the jungles of the Amazon jungles of Guyana, and I found paleoplasters, and I sampled them, and we found some diamonds out of them. But in that whole process, you know, I learned about the value that's driven in the stock, about how you get shareholder value. And this culminated the Las Cristinas, the Cresitas, this burgeoning diamond property to an offer by Hecla. And these guys, you know, and I said, guys, we have Cristinas, which is up in the air with litigation. We have Cresitas, which had a lot of social and environmental issues. And we had a diamond mine that it didn't really have been fully explored. And so I said to them, take the offer. And they didn't take the offer. And you know what happened to Las Cristinas, and Cresitas never went into production. So I learned the lesson that, you know, when the time comes, when you feel that you can get a good value for what you've done, like the stock went from 25 cents to 3.50. And I think the offer was 4. And subsequently, I left after that decision because I think it was a very smart decision. I couldn't really go further. So that propelled me to do my first deal, which was Energy Metals.
Yeah, well, that reminds me of my dad passing up on the $75 million offer from Amir, and then selling it to Amir 3 years later for net $1 million after paying the debt off. So it's a good story to learn there. So I'm actually going to go quickly over this slide, but essentially you've raised in your deals cumulatively $238 million. You then sold those deals cumulatively for $2.791 billion. And then future investments by operators to put those in production, $3.9 billion. Very impressive track record. And let's start with these are all the deals, but let's start with the first one, which is Energy Metals. So what was the idea behind putting Energy Metals together?
So I'm a reader like you are of trends, and I was looking at the whole uranium space. This is back in 2004. The price of uranium was $10. I just read this, the U.S. government's projection on nuclear energy, and it was very pro uranium, and I thought, geez, you know, I think this is where I should actually invest my time in. So it was a company called Clan Resources, run by a Scottish guy, and I convinced the CEO at that time that I should be the CEO and we should embark on getting uranium resources. And because the United States has the most number of reactors, and you probably heard this from so many uranium players, that that we should try to become the largest owners of uranium resources in the United States. And that's what I did. And I found a partner, Bill Sheriff, who had the keys to databases of uranium databases of Union Carbide. And so we used that database to actually stake all these claims. And it started off at 15 cents and then it went to $1, but the price of uranium went from $10 to $20 and $50. And we had a business plan that was for $50. We could provide so much value per share for that. And so when we noticed that the companies, the uranium prices kept going, we said we got to look and modify our plan. So we looked at taking over companies that had bigger or better assets than we did, using our paper, because our paper seemed to, because we had this moving story, seemed to grow in its value every day. And so I don't think anybody's ever done this, but within the span of 1 year, I took over 3 uranium companies. And so that kept going. The price of uranium went from $50 to $60 to $70, eh? And pretty soon, we decided, okay, so how do we keep capturing the market? And we thought that we need a New York NYSE listing. So we went listed on the NYSE, and our stock went from 14 to 15, like to $16. And this was in all the course of 2 years, okay? So one of the sort of driving things for my work ethic is time is always against you. That uranium market could just die in a heartbeat. And so you want to, I have 3-year windows to do most of my deals. So in that time, at the end of the second year, there was a flurry of M&A activity, and there was a number of companies being taken out. Kazakhstan, there was a consolidation of the industry, and I made sure that we were ready for that. So within a space of less than 2.5 years, I was given an offer for $1.8 billion of paper of a company called Uranium One. And I'll tell you, right after that, probably a year later, the price of uranium, which had peaked at $138 the week that I sold it, within a year, it was like $60.
Now, the takeout that you got on that deal was actually in paper, which was a constructive lesson for you as well.
Yeah, so another thing I do is I'm a shareholder, and I'm the last shareholder. I never trade a share out till the very end. And as part of the deal, I think I had 4 million shares, 5 million shares. I didn't have very much money at the beginning. And I had to tie up my stock for a year as part of getting the approval for this deal to happen. And so that $100 million profit became, after 1 year, and I couldn't hedge it, I couldn't do anything with it, became 20 million. So it was an $80 million loss because I elected to, I elected to stay. Okay, but so that was quite a depressing moment in my life, and I thought to myself, I could do this again. If you could do it once, you could do it again, and so that brought me to my next deal. And again, okay, so it was Potash One. Okay, there was a lot of fertilizer was sort of the talk of the day. I guess that would be 2007 to 2010. Is that right? I think so. Yeah, 2007, and that there were shortages of it. And through my research, I know that probably every 20 years there's a need for one potash deposit. Okay, and so and I've learned from working with the Uranium Energy Metals Project that I always wanted to be in the lower quartile of production, and I want to have the lowest capex type of projects, like just business, plain business features that you need to keep in your head all the time. So I said, I'm going to look for in situ lease ISL potash deposits, so the one that Mosaic has in Saskatchewan. And where do you find other mines? Is beside mines. So within 5 kilometers of the largest in situ leach potash mine, I decided to drill 6 holes. I drilled 6 holes and I found 1 billion tons, 138 million tons of measured and indicated potash, KCl, at very high grades. And so during that flurry, Robert Friedland phoned me. He said, Paul, I can help you sell this to the Chinese. And he says, well, why don't you become my chairman? And I don't think Robert's worked for anybody else, so he became the chairman of Potash One. And his goal was to put me in front of him and his advisors, John Chrétien and all his gang of people, to get me to that sale. Because putting these potash deposits are like $2 or $3 billion type of capex. So, and I, as a CEO, I just kept de-risking. Probably the thing that I did initially was got the water from there's one small lake that feeds Regina and feeds Mosaic's mine, and it wouldn't feed my mine. And without the water, I couldn't have an in situ leach project. So I got the water, and so I just de-risked. I did a pre-feasibility study. I did a feasibility study. I kept moving. And I waited because my stock went down because there was a drop in sentiment for potash, and my stock went down like from $2.50 to 70 cents. And then all of a sudden, there was more M&A activity happened. And I remember, I don't know if you're aware of this, but the Chinese wanted to buy Potash Corp. And the Canadian government came in and said, you can't do that. Okay? So, but maybe something smaller might work, but not Potash Corp. So I used that time I went to India, I talked to the Tata family, I went to K+S, which is the oldest potash miner in the world. And and the other thing that I did within the space of like 2 years is I got an environmental permit. I went through the entire process of how to get an environmental permit, fast track it, so I could mine this thing. Remember, all against the backlash every day of having Potash Corp, Agrium, and Mosaic trying to kill me, okay? So I used to throw little forays, like I used to make offers to their chief engineers for 3 times their salary, okay? Just so that I would keep them off, and they would take them back, and I've single-handed probably helped everybody's career in all those places, tripled their salaries, okay? But that's a side. But so eventually, I had about 2 or 3 companies. I had Vale, Rio Tinto, and I went with the Chinese, but it was very difficult. The mentality at that time for making deals is a little different. The culture are so hard. I would advise anybody who's doing a deal with the Chinese to make sure that they have a Western negotiator, that they pay a bank fee, that they have advisors, because otherwise they'll say, here's a definitive agreement, and the next day you're talking to a new person and a new definitive agreement. So it happened to me. So eventually I parlayed that to an all-cash sale to K+S. And K+S was a big initial target of mine because they had the distribution, but they had the highest priced potash mines in the world. And this mine, this deposit would make them one of the lowest, cheapest ones, because the operating cost for this mine was, the feasibility study was $45 a ton. Okay? And so they made me, and I can tell you about NAV, so they paid me 0.3 of NAV, $454 million. And they subsequently spent, I think, more than $4 billion to make that mine, the Bethune mine. And it was, so that was quite the...
low-cost operator?
So I don't know how you can make money after putting $4 billion in a world full of potash. I think the price of potash, and okay, also at that time, the price of potash went from $100 to $1,100. So that's what was the spur. So somehow I got that one right, and I think it was like $800 when I sold it, $800. Today's, I think the price of potash, MSP, is like $220, $250. So they're making money today, but I don't think they can amortize the cost of that loan.
So then you made your foray into the lithium space, which actually you were a little bit early on that trend.
So this is this would be 2009 then. And so I did a lot of reading about electric vehicles. And remember Tesla's little Roadster? Remember that? I thought, wow, an electric vehicle. I thought, I love that. So I'm a car buff. And so I thought, I think these electrical vehicles are going to really catch on. I got to understand what's in them. And my kids said, and my kids kept me away from going base metal. And so she said, yeah, you should do something for the environment. So I started a company called Lithium One. And and it was all about looking for the cheapest lithium in the world. And the places where you find that are in these salar, at least in 2009, was in salars in Argentina. And so I took my son, and the only mine in Argentina at the time was owned by FMC, and it was in a salar called Hombre de Muerto, Dead Man Lake. And I noticed that it was only half owned, and the other half wasn't claimed. So I found out who owned them, and it was these borate miners that own, and it's a pretty substantial size, maybe 30,000 hectares. And I made, in the course of 3 weeks, I made 17 property deals. So I could own the other half and I renamed it. Instead of Hombre de Muerto, I named it Sal de Vida, salt of life, okay? And that was my motto. And I started drilling away, and the cost at that time, the price of lithium carbonate was around $1,500, okay? And so I thought, geez, you know what? And my price was too low, my stock price the cost of my capital wasn't good, so I said, I need a partner. So I went to Korea, and I convinced LG Chem to be my partner, because they showed me their battery, and they needed lithium. So this was in 2009, and so LG Chem became 15%, and they gave me $15 million, which is a hell of a lot of money to explore in the Sal de Vida Basin. And so I went all the way to feasibility, got a permit, and I realized that actually to mine lithium from salars is a very complex production, and that I didn't have the people to move it forward. So a company that had that capacity is a company called Galaxy. And so they came to me and they said, here's $120 million. You've done some good work. We'll take it from here. And subsequently, Galaxy turned that $120 million investment to a $2 billion company. And I also had assets in James Bay, some spodumene assets. And they just recently sold, because they had the same problem I had. I don't think they know how to actually get the lithium out of the salar. They sold the northern part, you can't see that, of that salar, the blue, to POSCO for $280 million. So, and you still own the southern portion.
And on this deal, you got shares as well in Galaxy. And what happened on those shares?
So they went down to 3 cents. They almost went bankrupt. So they recapitalized. The lithium price went from $1,500 to $5,000 and kind of flattened, and steam was out of the engine for lithium. And then it took off again. It went from $3,000 to $10,000. Galaxy was back on the wheels. And so I kept the stock because I couldn't bear selling 3-cent stock. And I eventually sold it for like $4, $3, $4.
So the acquisition price is actually 4 times higher than effectively.
Yeah.
Right. Goldrock.
Okay, one of the hardest things I did, okay? And, so after a while I thought, well, geez, I know what I'm doing. I really think I got this one pegged. And so I thought I would delve into the gold world. And because I had a thought, this was back in 2012. This is a 4-year journey. There was a group of geologists that had run this company called Mansfield Minerals, and they didn't have the wherewithal on how to move it forward. And I thought that at $1,600 gold, Argentina still being okay, that I could just repackage this project, do a feasibility study, and sell it. Because it was a heap leach, plus 1 gram, really good recoveries, okay? And I thought, no problem. No, big problem. The day I released my feasibility study, the price of gold went down $200. It went down to $1,100. It went down to $1,000. I was changing the sensitivity numbers on the feasibility. I was stuck. The Argentina, Kirchner, the president, went crazy. They put embargoes, and I remember going around to institutions saying, look how great this project is, and look at the IRR on it. And he says, but you're in Argentina. How could you go in Argentina and come with a gold project? So I had to become creative. I said, how do I get around this? How do I stay, on top of this? So I found a rich billionaire in Argentina that owns all the shopping malls in Argentina. And he was a gold bug, and he believed that eventually things would change. And he gave me a financing at twice my stock price. So he gave me like $10 million. So I believe in not diluting my company and values per share very much. And so, great. So that got me, and I bought an HPGR. I thought, that's what I need to maybe have a high pressure grind roll. And there, people way back then, no one believed in them, but I think more and more people are going to use that for gold exploration processing. And so I converted the money into a machinery which I thought would be attractive to a potential buyer. So that went on further, and then Waterton. I ever heard of Waterton? They were trying to take over Chaparral, and they wanted an in-between company to help them do that. So Goldrock became the in-between company to help them get that asset. And I said, all I want from the guy, Isser Elias, is Isser, give me $5 million placement at double my stock price, and I'll help get this done. So we did that. So I got another $5 million at twice my price to continue moving the project forward. So no dilution. And then, of course, if you're going to sell anything, you always have to have at least the concept or the perception that you can build it yourself. And so I thought, you know what? I need a debt sheet. I need to show people that I can actually put this in production. And so Orion mine financing. And so I had a term sheet. And I said, as part of the term sheet, you got to give me $5 million equity now while I work on the financing. So they gave me another $5 million. And all I was waiting for was biding my time for the day that gold got a heartbeat and that Argentina would have a new election. So come January of 2016, there was a new government. There was a reduction in taxes. Argentina was open for business. The gold price went up. And I had 2 companies approach me, and one was Fortuna Gold Silver. And within 3 weeks, I'd sold the company for, it was $186 million. And it was trading 5 weeks before that, probably for 35 or 40 million. So that was just timing and sticking with it. And it was one of the hardest ones that I've ever done.
I didn't budget enough time, so we'll just go over a bit here. But so you ended up back in the lithium space after that.
Yeah. So Frank Frank Justra and Brian Pace Braga had this lithium company in Nevada, and they asked me if I could help them with a lithium project. And I said I didn't really like the asset they had, but I would find them an asset. And I knew of an asset with, if you can buy a property that has a lot of work done in it, that the poor sap before you, it's blown their brains out. So I found a property that Stan Barty owned, okay, and Stan's a character, and it was called Sols de Los Angeles. And so I picked that property up, and I did a feasibility. I was working toward a feasibility study. Did the same things I did with Lithium One, and there was at that time I'm just going to go quickly, but there was a time again of a lot of M&A activity. So within the space of 2 years, I'd taken a stock that was 15 cents and sold it, and it had a market cap of $5 million, and I sold it for $265 million to the Chinese. And I think now they're working on doing a pilot plant there.
And can you share?
Did the culture in China change from your previous time?
So here's how the deal actually worked. So we went back and forth with numbers, and we weren't getting anywhere. I didn't really trust them. There wasn't enough trust. And they actually said to me, "Don't you trust me?" I said, "No." He says, "Oh, come to China and see our place." He says, "I don't really want to come to China." I said, "You know what will make this deal happen? You put $20 million into my lawyer's trust account, then we have a deal." That's how I got the deal done. Without that $20 million, and there was, if you've watched the history of this Lithium X, it was shaky. There was a question of whether they would actually close. But I think the $20 million was the only thing that actually moved them forward to lose that money. So, but I figured that was the only thing that how I could actually, I wanted 40, but I got 20. So I think it's been, I love this industry because you have, there's so many dynamics. It's such a strategic thinking game. And you meet some of the brightest people, like in our industry, you got to be nimble, very nimble, and work with really good people. And it seems like I did a lot of this. I had some fantastic people working with me, okay, that did, I may have done a lot of strategic thinking, but they did a lot of the execution of this.
So what's the sale number going to be on Victory?
So Victory is, so I believe in the vanadium space, plus I think Collin, our CEO, is a hard worker, and I love that. But the reason I liked the vanadium space is because of the law that China did on putting vanadium to, like the Viagra of, as I call it, of steel to make it stronger. They have too many buildings that are falling down. They haven't yet to actually enforce this law. Okay, and if they do, there'll be a huge demand for vanadium. And so when I first started this journey with Collin, I thought that I'd like to find something in the U.S. Okay, I'd like to find something primary. And when I looked at this deposit, before it actually went public, I spent $1 million, I think $1 million of my own money drilling it to make sure that it had vanadium in it. I'm not one of those people who says, yeah, I think it's got vanadium. So I think that, and then spend money on the metallurgy to see that we can actually extract the vanadium there. So I believe that we'll get a run in vanadium, and that we will together de-risk that project, get a permit, get a big resource, and we'll try to do it with a minimum amount of sure dilution.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?